Investing is not easy. The market is a highly volatile environment that's vulnerable to fluctuations and surprises. Sometimes a company is fashionable one day and bankrupt the next day. If you're a beginner in investing, Benjamin Graham's The Intelligent Investor is a great way to learn the basics of investing and how to get through the highs and lows of investing, especially during unpredictable times. The book was initially published in 1949, but it continues to be revised and updated today due to its timeless wisdom. Its relevance remains strong even among the biggest and most successful investors today, such as Warren Buffett. Graham has been called the father of value investing for pioneering the method of evaluating companies at low-risk values that with time come with big returns. It warns against irrationality and going along with groups or trends in investing. Instead, it promotes individual analysis and research, discipline, and patience. Here are the top 7 lessons from Benjamin Graham's The Intelligent Investor. Lesson 1. Focus on loss minimization. When investors focus on profit maximization, they can easily be swayed and blinded by market trends. They may not believe that a currently low-value company will never amount to anything, or that a now big-time company will always be profitable. Experienced and wise investors like Graham know that this is not always the case, because the market is constantly changing. While most people are motivated to try investing to make profits, losses are a part of the process. To take advantage of this reality, Graham suggests shifting your focus to loss minimization instead. Lesson 2. Evaluate companies based on performance. A common misconception of investing is that everything depends on the market, and that the market is the determining value of stocks. Graham refutes this misconception through his allegory of Mr. Market. The market is merely a place for buying and selling shares to investors at different prices. It can become noisy when investors fuel daily market sentiments with their greed and fear. Graham argues that individual investors hold the true power. After careful deliberation of the market's offers, they can accept or reject it, and they're not always compelled to be invested. Instead of focusing on how the market assumes to determine the value of stocks, investors should pay closer attention to the actual performance of companies. By looking at the facts of their performance and analyzing them, investors' buying and selling powers can have more force and positive impact. Lesson 3. Provide a margin of safety or error. Humans run the world of marketing and investments, and therefore, Graham suggests an investing approach that acknowledges that reality. Instead of predicting the market or being 100% sure of your investment, an investor should provide a margin of safety when deciding to buy or sell stocks. By making space for human errors, investors like you can prevent fatal losses when the company they've invested in goes bankrupt. Investors can create a margin of safety by 1. Buying undervalued stocks. 2. Avoiding confusion from investors. 3. Accept the inability to predict the future and the fluctuations of the stock market. 4. Diversifying their investment portfolios. And 5. Purchasing stocks in companies with high dividend yields and low debt-to-equity ratios. These methods serve as safety nets for you to quickly recover and make better investments moving forward. Lesson 4. Practice value investing. Graham describes value investing as the process of deriving the intrinsic value, such as assets, earnings, and dividend payouts of a common stock separately from its market price. If the market value is less than the stock's intrinsic value, then the stock is undervalued in the market. In that case, if you're the investor, you should take the opportunity to buy the stock because it's like a discount on your part. You should also hold the stock until the price reflects its true value. When that happens, you should sell the stock to gain profit from the original buying price. Lesson 5. Be patient. In line with the previous lesson, Graham urges the principle of patience to be a successful investor. Buying an undervalued company may seem like a weak move for some, but with patience, the market will soon realize the company's true worth, just as you did when you researched the company and bought it. On the other hand, if you're impatient and only follow market trends without doing any research, you might suffer losses and consequences. Therefore, it's essential to be patient to see the results of your efforts and reap your benefits from them. Lesson 6. Create your own strategy. Graham's book and philosophies have inspired many financial investors, such as Warren Buffett. From reading The Intelligent Investor and being taught by Graham himself, Buffett developed his own strategy. Instead of solely seeking capital gains by selling stocks, Buffett aims for ownership and holds them in the long run, believing in the company's capability to generate earnings. In other words, it is indeed possible to learn from the best and build more knowledge and tools on top of their lessons to customize a strategy that best works and fits your preferences. Lesson 7. Diversify your portfolio. As the old saying goes, don't put all your eggs in one basket. Graham gives the same advice regarding making your investment portfolio and creating a margin of safety. The more diverse your portfolio is, the less likely that all your investments will fail, since one won't heavily affect the others if they're not similar companies. In conclusion, The Intelligent Investor is filled with information and lessons that remain relatable in today's market. Accepting the reality of its nature as an uncertain environment is always the first step. By doing so, you can use reality to your advantage and adjust your investing strategies. You should also expect the best and prepare for the worst by putting in place safety nets that will help you recover if you fail. Indeed, while it's not easy to invest when it involves risks, Graham's lessons make investing worth trying when tested and proven to be effective for many successful investors. Thank you for listening. If you like the book summary and you want to see more in this category, please like and subscribe so I can create more. You can also get a free copy of the entire audiobook by clicking the link in the description. Until next time.